Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and we're glad you're joining us today. We're starting off with a story that's been making waves in the financial sector. The Bombay Stock Exchange has been experiencing some volatility lately, and our listeners are eager to know what's driving these changes. To give you a better understanding, let's take a look at some of the key players involved. First off, we have Titan, a company that's been steadily performing well over the past few quarters. Despite this, their stock has been underperforming compared to some of the smaller players in the market. According to Hemang Jani, an independent market expert, Titan's growth potential looks good, with expected growth of 16-18% and a margin of 10-11%. However, the elevated gold prices and the rise of lab-grown diamonds could potentially impact their business. Another company that's been in the news is United Spirits. With the recent signing of the UK trade treaty, some experts believe that this could be a positive development for the spirit industry. Hemang Jani notes that United Spirits and United Breweries are well positioned to benefit from this treaty, with potential incremental volume growth and high-margin products being imported. We're also seeing some movement in the textile sector, with companies like Key PR Mills, Himatsinka, and Gokaldas experiencing high volumes. These companies could potentially benefit from the trade treaty, given the large size of the opportunity for textiles. It's essential to remember that the market is constantly evolving, and it's crucial to stay informed about the latest developments. As we continue to navigate these changes, we'll be keeping a close eye on how these stories unfold. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our show, and I'm excited to dive into our middle segment, where we explore the latest developments in the energy sector. Today, we're taking a closer look at Cenovus Energy Inc., an integrated energy company with operations spanning Canada, the Asia-Pacific region, and the United States. As we delve into the world of oil and natural gas production, upgrading, refining, and marketing, it's essential to consider the complexities and risks involved. Cenovus Energy Inc. is committed to maximizing value by developing its assets in a safe, responsible, and cost-efficient manner, which is no easy feat. The company must navigate environmental, social, and governance considerations, all while ensuring its business plans are viable and profitable. Let's take a look at some of the key metrics and figures that have been released by Cenovus Energy Incorporated in their recent financial reports. We can see that the company has made significant investments in its operations, with capital expenditures totaling over $1.2 billion in the first quarter alone. This investment is aimed at driving growth and increasing efficiency across its various segments. One of the notable aspects of Cenovus Energy Inc.'s approach is its focus on adjusted market capture, a metric that provides insight into the company's refining margin performance relative to market benchmarks. By excluding inventory holding gains or losses, this metric offers a more accurate picture of the company's cash-generating capabilities. According to the latest figures, Cenovus Energy Incorporated has achieved an adjusted market capture of 62.5%, indicating a strong performance in its downstream operations. As we analyze these developments, it's crucial to acknowledge the potential risks and challenges that Cenovus Energy Incorporated may face. The energy sector is inherently volatile, with factors such as geopolitical tensions, regulatory changes, and shifting global demand all impacting the company's operations. Furthermore, the integration of environmental, social, and governance considerations into its business plans requires careful management to ensure long-term sustainability. In conclusion, our examination of Cenovus Energy Incorporated highlights the intricate balance between driving growth, managing risks, and prioritizing responsible practices in the energy sector. As we continue to navigate this complex landscape, it's essential to stay informed and adapt to the evolving needs of the industry. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're coming down to the wire in today's episode, and we've got a fascinating story to wrap up our discussion. As we've been exploring the world of economics and finance, it's clear that central banks have been making waves with their interest rate decisions. Today we're looking at the Bank of England, which is widely expected to cut rates. This move won't come as a surprise to the market, but what's interesting is how sterling rates are sensitive to moves in US rates. This means that markets might be pricing in too many more cuts in the near term, setting us up for potential volatility. The Fed, on the other hand, has been taking a balanced approach, but yields have still managed to edge lower due to rate cut optimism. It's clear that cuts are seen as inevitable eventually. Our friends at Economic and Financial Analysis have been weighing in on this topic, suggesting that the Bank of England will likely cut rates, but this won't be a shock to the market. What's crucial to note here is that a move lower in US rates could overprice the number of Bank of England cuts. This highlights the interconnectedness of global economies and the importance of considering multiple perspectives when making investment decisions. As we close out today's episode, it's essential to remember that investing always involves some level of risk. It's crucial to stay informed, do your research, and consider multiple sources before making any decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.